Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, June 26th, 2022. As the markets open this afternoon, this evening, depending on where you are in the country, we are seeing a little bit of a correction. In the NASDAQ, it is managing to hold above 12,100 thus far. And let me just double check one thing. What have we done thus far? Yeah, we dipped slightly below 12,100 and now are well back above it. So it's just a little bit of a correction. So I'm starting here on the daily chart, and now I have switched it back. And remember, I continue to talk about that I run two scenarios, which I believe have equal a 50-50 probability of being the pattern and or the market that is in force. So last week I covered what I call, it's still a downside scenario, but one that is closer. If it is the count in force, it is closer to reaching a near-term bottom. Whereas the parallel that I'm running with it has also reached what might be termed a 1 week bottom. But has a much larger, stronger downside result after this rally. I mean, a very major downturn. And I will talk about that in a moment. So here on the daily chart, we're back to running it where we have 5 down. It's intermediate wave 1. Not intermediate wave A. And what it is a part of is a larger 5-wave intermediate degree 5-wave decline to form primary wave A. Okay, so that's the task at hand. We're in an intermediate degree moves to form the primary A wave. That primary A wave is either going to be 5 waves down to form A, or 3 waves down to form A. That's the choices that we have. And they both carry, which could be substantial views. In other words, it's like for one to hit, it's creating a much deeper decline than what I believe most people are expecting, since most people don't necessarily want to wrap themselves around the possibility of the lesser decline, and that would be the count where this is an intermediate A and intermediate B, and we're forming and completing an intermediate wave C to complete primary A. That's the near-term bottom. That one still would project down to maybe 10,675, maybe 10,500 to complete. But unfortunately, it is now getting a little bit too big. And the daily bar left after Friday's trade is a bit bigger than I would, okay, good. Bigger than I would, come on, that I would want. I know I talk to my screen a lot because I want to open this up so we can see what's going on. And as we can see, this has just gotten a little bit too big, but what it can be, so I'm allowing it still. For it to really start to break the previous, where this would be a 1, 2, a 3, and this is a 4, still looking for a 5. You can see that this is like way bigger than this. And though it still fits for the 3rd, it's kind of getting out of line for the fact of what it is outside of that. So that does put a little bit more steam and support to, let me tell you, there's 2 things there, and there's that one. And let me just change that. I knew that was underneath there. That was what it is under the other count. That's the 3rd. So under this count, it's the 5th. And under this count, we have additional room because this would be minor wave 1. And so we would be doing a minor wave 2. Now, let me just go back out to that daily chart, and then I can put on the fib retracements for a small minor wave 2 bounce. And these are probably not going to be super accurate, but close enough. Come on, come on, come on, come on. Right there. Now go back down to that hourly chart, because here we have still not a whole lot more upside potential, but enough to kind of go over. So if this is a wave 2, we're already past that 50%. So a second wave on a Fibonacci basis, Fibonacci retracements, wave 2 to wave 1. Wave 2 normally comes in with a 50 to 618. Well, it zipped past 50 on Friday. And so we're now into this likely going to get up to 12,255 before the end, possibly, because we cannot also rule out that they just kind of keep marching it. And it isn't anything about them turning bullish. It isn't anything about anything bullish or bearish. It isn't anything about what's happening in the world. It's not anything about anything other than position adjustments. They're making changes. So, you know, in the indexes, particularly in the Russell, so you're doing a lot of reallotments, readjusting positions when you hold them in these various instruments. So with that going on, I did read and was told also on Friday that there was somebody who said the possibility, and I don't remember, JP Morgan, I believe, a JP Morgan analyst, that said the markets could continue to climb possibly another 7%. And I'm sure they were referring to the S&P, which Lord only knows what it could be here in our market or in the NASDAQ. So in any case, I think that we have 12,255, 12,421, 22. And then it just breaks to these levels where it's getting closer, 12,700. And on a readjustment, on reallocation, they're believing that we could, depending on what stocks that they're going to do and how many of them are in the NASDAQ. But I'm sure the NASDAQ can find its own reasons to push prices higher. So again, it would come down to Apple, Google, Microsoft, the stocks that tend to kind of lead in these quiet periods because they're more anticipatory to making solid money and they're great and they're grounded, et cetera, et cetera. And that all is true. But for all other reasons, the markets are going to correct, whether we want to agree with it or whether we don't, whether we want to think that Apple's going to survive the whole thing, which I tell you it will. But at the current level, no, I doubt it. I doubt that it stays there. So that's the point. And it's the whole point about trading, you know, understanding is like, I am presenting to you what once this is done, what we have waiting outside is a very destructive drop. And the destructive drop would come in the form of a minor third wave. So again, intermediate 1, intermediate 2, we're dropping in an intermediate third wave. And basically this can go for both counts, to be honest with you. Because in the other one, we were counting a C wave down. The C wave consists of 5 waves of minor degree. This all could be minor 1. And we still could be in that C wave. So again, they're still running in conjunction with one another. So both can be turned, the other one can be turned into a much more negative picture and be suggesting that the next drop is going to be pretty hard, strong, and be bigger than that. So it would produce a nasty little tumble. And then again, we're looking for much lower levels. If I'm looking for a third to be greater than the first, and the first was 982 down to 11,068. So it was almost 2,000 points. And I'm looking for it to go deeper. So that's a lot. That is a lot that the market has to do. So wherever it should finish up, we're looking at least into this, down into 10,500, right? Because we're here at 12,001. I'm looking for 2,000. It's going to be 10,000. 11. So we're closer here, actually the 10,500 and below. So we'd be looking for just on that wave 3 equals wave 1 basis puts us down here. And I'd be looking for wave 3 to be the longest and the strongest. So there's no doubt the potential for larger drops exist right now. They truly, truly do. And there are a lot of things that I will cover because I'm going to do a big picture update. So it'll be nothing but a very strong technical update on the larger picture, on that maximum monthly picture that I can draw, which for the NASDAQ in the future goes back to the early 80s. So I capture all of that move. And there's a lot that has taken place that we would be heading back towards. And I will show that and I will detail it. And again, it's people are going to wonder what's going to create it, what's going to happen. And it's like I believe that there are many things still to come in terms of economic detriment, or the economy drifting lower, the economy still being in trouble, the economy still adjusting. This is one of those periods that it likely will last a little longer. But when I look at the charts, and just to give you a little preview, if you're looking for the NASDAQ has potential under this particular account to drop down to the area of the 2002 low. So not to 2009, which fits for the S&P. I'm looking for that to get back to that 2009 low. But the NASDAQ had created its major low in 2002. It might have been 2003, but that period after the dot-com bust. And so that's the area that I think we go back to. And it's truly nothing more than it. And again, Apple, Amazon, Google, Facebook, or AKA Meta, Tesla, all of them have been pumped full of air. And now reality sets in with the economic conditions being what they are, interest rates being what they are. This is the cost of doing business. This is the cost of making that car and then selling it. And this is the cost when you don't sell enough, et cetera, et cetera, et cetera. So what we can see is just readjusting all the way along. And again, longer term. These little short-term bops are going to be nothing more than just a trading opportunity, but have nothing really to do with this longer term picture, the bigger picture. The bigger picture is just going to continue to chug along. But remember, the media, the financial media, they don't sell airtime. They don't sell press. If it was constantly telling everybody about the danger that lies ahead without putting something in it, indexes advance as relief that the Fed may quiet down. I'm like, I'm not sure where they get up in the morning to print something like that, but that must sell. Everybody will jump on that for a reason to go, okay, I'm going to stay long. I see what they're going up, everybody believes that we're going up. And it's like, no. So again, I'm going to suggest that we learn and we adhere to trading without being biased. Don't be bullish, don't be bearish. Trade the price action. Trading the price action kept you long on Friday. Trading the price action put some serious dollars into people's P&L on Friday. And you could do it all as a day trader and make a tremendous amount of money. And I'm not joking. So it's there. And that's really what's at hand right now. No matter if we're going up, if we're going down, dollars are shifting, flying back and forth right in front of you. You just can't see them because they're on a wire, right? They're electronic coming into your computer, but they're there. And it's just transactions looking for a port. And so you can go in and the job is just to grab them and to make the money and be done. Don't care why. Just take advantage that it's happening and it's there right now. It will slow down. And when it does, it's painful. It takes a lot longer and it's a lot less reliable. And it's not as fun. Volatility goes away. And when volatility goes away, there's less trading. Right now, it's very good. Take advantage of it. So for tomorrow, I think we're in a small 4 here. And this is a wave 2 under the count that I'm showing. And so we have the potential for 12,255, 12,421. We actually can get up. I'm not looking for it, but the market can go as high as 12,820. It could go as close as it can get. It just cannot go above this high, which actually is 12,982. Cannot go above 12,982. That breaks the count and suggests something different. Possibly the other one that I was discussing, which I will discuss in a separate, a big picture update. So be looking for two for the NASDAQ, two for the S&P, showing the parallel counts and where they can come in, possibly. All right. So again, tomorrow, I will be looking for a little bit of a fourth wave within the C wave, right? A, B, 1, 2, 3, looking for the 4. You can already tell it's coming in pretty low. Well, I mean, in terms of not moving, not low as it's dropping, it's not dropping all that much. And this is 64. All right. Giving just a quick. We're looking at the possibility of at least down to 1,200, but we've seen 12,091. So maybe that was close enough. I don't know. I'm not looking for a lot. Right now, it is kind of hugging the hourly 4. We have the hourly 8, and we have the 20 down here. And yeah, it could. I would not think that it's going to do that with still having a stronger upside. I think that stronger upside may come tomorrow. And again, then we have those upper levels that I've just discussed and downside. So in other words, if we get another one and we pop above Friday's highs, which is 12,164. So get above 165, 170, we start pushing toward 12,200. We could be completing. And then what comes next is pretty strong. And we'll talk about that once we get crest. But if it should start tomorrow or overnight, it would be a precipitous drop. It would be, there's something that I believe it would be generated by news. There's plenty of other reasons the market could just fall over because the market's going to fall over because of inflation and interest rates, et cetera, et cetera. But thus far, that doesn't seem to be catching anybody's attention. So I believe that it would be something else or kind of jar people out of their lull and just buying it to, oh yeah, we're still in the downtrend type of activity, in which case we'd be breaking the hourly 20, we break the hourly 50, we break the hourly 200. And I would imagine if it's severe enough, that could be done in a day. The NASDAQ to go down 500 or 600 in a day, that would be an announcement that whatever you were just doing, guys, it's done. Now, that doesn't mean they're going to back off, because they may not. But once things get going, I would have a lot more confidence in the downside than I would the upside. I think the upside is more temporary and the downside is a little bit longer lasting. Just that they happen so quickly. And then we spend a week or two going through these corrective phases. So I'm still looking for upside. If I start to see the failure, trade along with it. It should be a decent one. They still could come in and blast it higher. But I think if we get sellers and they push hard enough, that we could get like an hourly or a little bit longer trend going, just because everybody will kind of jump in and they'll want to get out of what they've just done. So again, price action, just follow it. And our next update will be on Monday, the 27th.